Time for the market analysis for this week. We are joined by Edwin Chui, a research analyst at Dyer and Blair. Many thanks, Chui, for making time. Thank you. Well, it has been an interesting week, especially when you take a look at the NSE 20 share index. It has been on the downward trajectory. Perhaps what explains this in a simple way?
So there are two main factors. Number one is what has been happening in the market since around May, which is a foreign investor-led emerging market and frontier market sell-off. So foreign investors have been net sellers for quite a period of time. The second main factor is that our local institutional investors have taken a wait-and-see approach, especially with regards to the finance bill. We know that a critical part of the finance bill is whether we're going to repeal the interest rate capping law or not. So as they await more clarity on that, they are choosing to wait and not buy, and that's part of the reason why the net selling has impacted the indices.
Interesting that you bring this up, Chui, because the central bank governor is on record saying that we are seeing rebounding of the economy, where they are projecting a growth rate of about 6.2% in the quarter two. At the same time, we're not seeing the same sentiments on the markets. And of course, you've tried to explain it. But really, looking at the investor community, what should they expect? Is it a long-term thing, or in the near term, things will stabilize?
I think it's a medium-term thing. I would argue that 6.2% is quite ambitious. Mm-hmm. We internally put the growth at about 5.5 to 5.8%, and I think even 5.5% is not really possible to achieve without a remarkable growth in private sector credit. Right. So it's critical that we repeal the interest rate cap so that we can free credit to the private sector.
Interesting. Yeah. And Chui, one of the other stocks that I'd like us to take a look at, especially on the top gainers for this week, I'm seeing Williamson Tea. The stock is up by about 22%. East Africa Portland also doing well, up by 16.8%. And for the agricultural sector, it's also enjoying relatively good weather compared to last year where we had a dry spell. What does this signify, especially for this particular stock in the agricultural sector?
So for Williamson Tea, we had the results today. They had a profit of about 502 million, which was better than the loss of 261 million last year.
Sure.
And a lot of that is, as you have pointed, due to improved weather conditions. But also, most importantly, they paid a very good dividend of 20 shillings a share. Mm-hmm. And I think that's the main reason why the stock price really did extremely well. I think there is a question about whether too much rainfall is good for the listed agricultural entities, because they also do need a degree of sunshine. So there is we need a bit of rainfall, but we also do need a bit of sunshine. So I think, but for this year, we do expect this performance to be sustained.
All right.
Yep.
I like that when you're saying we need a bit of sunshine.
Yes.
Looking at the cement makers, that is East Africa Portland, they're also doing well in trading, up by 16.8%. What do you have to say about this? I think it's a speculative stock because it's still loss-making, and there are still a number of legacy issues that have to be addressed. We've seen issues in the popular media about some land transactions are likely to happen, which could create potential cash flow for the business. But in the grander scheme of the cement industry, I think East African Portland Cement has a long way to go. Interesting. Yep. Let's talk about the losing stocks. Seeing Uchumi Supermarkets, we've seen the share price sort of appreciating over time. It's now valued at about a shilling and 45. And of course, we've seen there's a deliberate attempt to turn around Uchumi by them trying to fix the internal issues, especially around debt. And for this particular stock, what is your general outlook?
So the general outlook is not as clear because there is a recapitalization issue. Uchumi actually needs new capital. Mm-hmm. And we know they have been in the market looking for a strategic investor.
But the government is saying no bailout.
The government is saying no bailout as well. So until we know for sure they are going to get more money, either from the government or from a new strategic investor, it's very unclear that the company can actually turn around. Because even after you've fixed the internal issues, now you do need new capital to be able to restock the branches.
Interesting.
Yep.
And still staying with Uchumi, we're also seeing Nakumatt trying to bounce back. Of course, it's not one of the listed companies, but the retail sector is undergoing a new sort of transition where ShopRite from South Africa is making its inroads into Kenya. Of course, we know the big brand Carrefour has already opened its 5th branch in Nairobi, and their outlook is quite bullish. What can change now that you're seeing Uchumi might be a small player, but they have a big stake in the overall retail sector?
I think what's now clear is that the problems in retail were never economic problems. They were not issues to do with our economic fundamentals. They were issues to do with, let's say, management and corporate governance of particular companies. So what we have now with this new entrance is probably maybe more choice for the customer, which probably is going to maybe, I hope, encourage some of these local retail entities to spruce up their corporate governance and be able to offer, you know, the customer better quality, better choice.
Very solid analysis there. And lastly, let's take a look at Home Africa. The stock is down 11.11%. Home Africa, of course, being in the housing stocks. The general feeling is that the construction sector is going to pick up over time. Of course, this has been anchored on a better performance with the domestic economy, and also we are seeing a rebounding of activity.
There is a rebounding of activity because the economy is in a better position than it was last year. There is also a rebounding of activity because of the government's focus on affordable housing under the Big Four agenda. And I think there will be even more momentum if we repeal the cap, because then it creates room for, let's say, commercial banks to finance not just the developers, but also potential buyers, potential off-takers of those developments, which has been a problem in the last 1 year and 8 months.
All right. Yep. Many thanks, Chui, for that. And it is a wait-and-see situation where we are seeing the push to repeal the rate cap is on, but will it gather steam when it gets to Parliament? Well, that's it for the markets analysis for now. Let's take a look at Markets 101 for this week. Well, time for us to take a look at what is the question on the streets for this week. One of my favorite segments.
How do investors make money on NSE? And number 2, which is the best time to invest in NSE?
Investors make money at the NSE by buying low and selling high. So you identify an opportunity early enough, you buy, and then you sell once the value that you noticed is realized. But of course, beyond that, there's a question of capital gains versus dividends. Sometimes you go into a stock because you know it pays dividends, and sometimes you go into a stock because you know it has room for capital appreciation.
All right. Well, that's where we close it off on the question on the street. We do hope that you've been satisfactorily answered. Well, it's time for us to take a look at our historical fact for this week. Well, it's a wrap from us on the Trading Bell for this week. We do hope you learned a lot, especially when it comes to the publishing industry. And I'll definitely be taking up that challenge to do my own book as well. Well, from us, it is bye-bye. Remember, you can engage with us on our social media handles appearing at the bottom end of your screens, and we definitely look forward to your reactions in the coming days. Many thanks, Eddie.